Hi there. Ice cream's going fast out here on a summer day. We're out here in front of, as you can see, a Baskin-Robbins ice cream store, and this strip mall is really close to our home office. And I've driven by here for about 30 years. And the only tenant that has been around this entire time is Baskin-Robbins. The nail places have been several nail places. The bank out here has been several different banks. There's a recruiting office that's been Army, Navy, and Marines. There's taco places that are now a fish and chips place. I mean, and on and on. Several different gyms have come and gone. But the one stalwart is Baskin-Robbins. And what's kind of funny is it because my ice cream's going quick? Is it because the ice cream is the best ice cream in the world? I don't know. There's tons of ice cream out there. I can't remember the last time I've seen an advertisement on TV or anything for the place either. And is it because they have the best employees? Well, no knock on the teenagers of the world, but it's just a revolving door. There's really nothing special about that. So what is the secret? And that's what I'm going to reveal. And that's what's going to make you an amazing option trader. This is my favorite object lesson ever. This is a real true 3-gallon tub of Baskin-Robbins ice cream, gold medal ribbon. And the hard cost for this entire tub of ice cream is around $45. And when they scoop out the single and serve it to the customer, they charge about $4.50. And there's about 95 single scoops in this tub. So the math is insane in their favor. That's what you call margin or profit margin. And I'm going to show you how similar this is to my money press strategy. Now, taking a look at the math up close is super important. Baskin-Robbins, there's about 95 single scoops in one of those big tubs of ice cream. And if they get $4 a single, now they can get much more than this in bigger cities. Maybe a little bit less in the smaller cities, but if you average about $4 for a single, and no one's twisting their arm to buy ice cream, right? Everyone's willing to come in and do this. But what they take in, this is almost 100 scoops, and that would be 400, but just 5 less. This is $380 that they take in revenue. And when you consider the hard cost of about $40, this, my friends, this is what puts a grin the size of the Cheshire Cat on any business owner. The difference between these two numbers here. That's called profit margin. Wall Street likes to call it free cash flow. I give it 2 big, huge thumbs up. Okay, this is a great, great business model. And what's really, really fun with the money press is we can get in a scenario very similar to this. What we buy in bulk, and we get a really good deal for it, we buy option time in the form of put options. We buy the time in bulk. Let's say this is our Home Depot bucket. And then for some reason, the world's in this mad crazy of what's happening now, what's happening next, and time, short-term time, gets blown up all out of proportion as far as what they charge for that time, what the world charges. And we love it because with the money press, we put that in our pocket. And in fact, in most money presses, okay, in different industries, it doesn't matter. If we can collect 2 of these weekly premiums, and we usually do these money presses for a 12-week period of time, and if they get over earnings, this is a side point, we can reset it and go do it another 12 weeks. But if we can get 2 of these weekly periods of time, we have our protection paid for. And we just have many, many more weeks of collecting income. It's really, really insane. If you have not looked into this money press, I'm telling you right now, if you've been a frustrated trader, this is you don't have to be that good. There's enough margin here where you don't need to be in front of your screen, and it's high time you know this. Go to freemoneypressbook.com and get started today.